Tesla hit a bit of a rough patch. You saw globally sales down about 9% year on year. And when you're looking at the EV space and the automotive space, year on year is usually the best way to take a look at this market to see how things are changing and growing. And so when it comes to GM, when it comes to Rivian, Hyundai, and even Lucid, there's just an opening here for them to expand their market share. Each of them has a different strategy as it pertains to 2024. And this doesn't mean that either of them are going to, or any of them are going to pass Tesla in this year. But from years working in the EV space, all you would hear is we're always competing for number two. We can never surpass Tesla. And whether you're looking at the kind of EV car space or even EV charging, the fact that Tesla has taken a step back, both in terms of where they're focusing their sales, as well as their EV charging network efforts, it means that other people, if they are able to step up, can make inroads.
It feels like after an initial surge over the last 5, 6, 7 years that there's been a lull in demand for EVs. And I don't know, A, do you believe that's the case? And B, why is that, do you think?
So last year we saw in the US about 50% year-on-year growth for electric vehicles from 2022. So if anything, that was a really strong and successful year. We did begin to see some of the challenges around adoption as you move from that kind of early adopters phase to more of the mass market. And that's where consumers are going to be less patient with the technology and with the upfront cost, as well as charging infrastructure. And I think what makes the US different than other regions like Europe and China is that charging really hasn't been figured out to the same extent. And the heavy reliance on Tesla means that when Tesla steps back from charging investments, lays off many of the supercharging network team, it means it's going to be more of a uncertainty for the consumer here. So data in the first quarter, we're finalizing. We've seen a lot of data come up. Outside of Tesla, other automakers like Ford, Hyundai, Rivian, all did quite well, but GM, Volkswagen, and Tesla took a step back, and that has a big impact on the market in the first quarter. We'll see how Q2 goes.
We are looking down the barrel here this week of some tariffs that will be imposed on China EVs imports into the U.S. Just knowing what we know about how these car makers operate and look at losses per vehicle when it comes to EVs, what would be better for Rivian and GM? Like more competition to kind of light a fire, or less that gives them more time to do stuff? Yeah,
that's a really good question, Alex. I think everyone that you speak to in the automotive space knows that the Chinese EV makers are out there, your BYD, and other brands. I mean, we even saw Zeekr last week.
Yeah, go public, right?
Yeah, go public. And so the pressure should already be there. Tariffs, you're not seeing really too many Chinese EVs really imported into the US. Volvo and Polestar might be the exception. But really what those tariffs looks like, I want to keep an eye on the battery portion, because I think that could have more of an impact than the couple or the thousands of EVs from China specifically, given that the battery supply chain is still very heavily reliant on China, particularly for those lithium iron phosphate batteries, LFP, which is used to help bring down costs in electric vehicles. For GM, GM is competing in China already, so they have a good sense of how competitive that space is. And really there you're seeing great technology and upfront cost at a low level, which eventually you'll see here. I mean, if anything, maybe the tariffs help stem the gap a little bit, but if you fall behind and don't invest in electric vehicles now, we could be having the same conversation in 2 to 3 years with those Chinese automakers aiming to come to the US.
So do we have a sense that the US OEMs, the Fords, the GMs, Stellantis of the world, have pulled back on their commitment to EVs, or maybe their timing of investments on EVs? Do you think that's happening?
I think the timing on investment in EVs is happening, right? In terms of their overall strategy, they've been, I think, approaching the market in a different way. Ford has been pushing towards this new EV platform that they're beginning to kind of produce in next year. GM, of course, has its Ultium platform. And for Stellantis, they don't actually have any fully electric vehicles here yet, although they have the highest selling plug-in hybrid electric vehicle, the Jeep Wrangler. A lot of this is on timing. But what I always like to say is that timing, and the investment is one thing, but you have to produce ultimately. And so if it's a delay of 6 months, a year, that's okay, but the cost of inaction gets higher. And if you really say, not just to the Chinese automakers, but other automakers like Honda and Kia really could make up a lot of ground here. And that's why there's such a big opportunity for Rivian to kind of step in. Ford and Tesla remain the number 1 and 2 EV makers here in the US. But they don't really have any near-term goals for 2024. And so when analysts are taking a look, trying to see what they're doing next, having a clear product roadmap could kind of clear up a lot of that uncertainty, and we don't have it right now.